All right, so let's talk Vancouver real estate. Everyone wants to know, will this potential U.S. tariff actually cause prices to drop?
Well, there's this fascinating economic analysis that tries to connect the dots between a potential U.S.-Canada trade war and what could happen to housing prices here in Vancouver.
Okay, so take us through it. What's the situation?
Well, you know how the U.S. is thinking about that 25% tariff on Canadian goods?
Yeah, it's a pretty huge deal, 10% on energy too,
No,
starting
sure.
March 4th, 2025, right?
Right. So this report dives deep into how that could shake things up for anyone thinking about buying or selling property.
All right, so paint a picture for us. How could this actually play out?
So imagine you're a business owner here in Vancouver. You're exporting goods to the U.S., but now there's this 25% tariff. That means your goods are suddenly way more expensive for American customers.
Yeah, that's got a sting.
It does, right. So now you're at a disadvantage. You might have to scale back production, maybe even lay off workers.
Oh, that's bad news. But how does that connect to the housing market?
Well, think about it. If businesses are hurting and people are worried about losing their jobs, are they really in the mood to buy houses?
Probably not.
Exactly. That uncertainty can really chill the whole market, making both buyers and sellers hesitant.
So it's not just the direct cost of the tariff, it's this whole vibe of uncertainty it creates.
You got it. And that uncertainty can ripple out and affect things like mortgage rates. Banks are going to be looking at this potential economic trouble and thinking, maybe we should be more careful about lending money.
Oh, so they might raise interest rates to cover their risk.
Exactly.
So on top of everything else, potential home buyers might also be looking at higher mortgage payments. Ouch.
It is. And then there's another layer to this. We haven't even talked about construction costs.
Oh, right, because a lot of building materials come from the U.S.
Yeah, so that 25% tariff would make building new homes here way more expensive, and developers are probably going to pass those costs on to buyers.
Wow, okay. So we've got economic uncertainty, potentially higher mortgage rates, and rising construction costs. That sounds like a recipe for disaster.
It could be, but let's not get too carried away. Before we jump to conclusions, let's look at what's actually happening in the market right now.
Okay, good point. So as of January 2025, what's the current state of Vancouver real estate?
As of January, the benchmark price for a home in Metro Vancouver is sitting at $173,000 Canadian.
Okay. That's still pretty high, but I remember it was even higher, right?
Yeah, it's actually down almost 7% from its peak back in April 2022. So there's already been a bit of a cool down.
Interesting. So prices have already dipped a bit. Do you think this downward trend will continue, especially with this tariff thing looming?
That's the big question. Keep in mind, those benchmark numbers are reflecting past sales. What really matters is how this potential tariff will impact future decisions.
Right, because it's all about how people react to this new information.
Mm.
Okay, so looking ahead, what does the report actually predict? This is where it gets really interesting.
Yeah, so the report predicts that in the short term, let's say by the end of 2025, we could see prices dip another 5 to 10%.
On top of what we've already seen.
Yeah.
Wow, so that could bring the benchmark price down to somewhere between $1,057,500 and $11,114,350 Canadian dollars. That's a pretty big drop. But would that be the bottom, or does the report think things could go even lower?
That's tough to say for sure, but the report actually uses the 2008 financial crisis as a comparison point.
Oh, interesting.
Yeah, back then it took about 18 to 24 months for the Vancouver market to really hit rock bottom. So if we apply that same logic to this tariff situation, the report's suggesting that prices could keep softening until, well, the end of 2026.
So we're talking maybe 2 years of potential decline before things stabilize. That's a pretty long time to wait if you're hoping to buy.
Yeah.
Does the report offer any hope for a rebound after that?
It does. It suggests that in the long term, things could bounce back. Canada might negotiate some new trade deals to kind of lessen the tariff's impact, or the government could step in with economic stimulus packages. And of course, let's not forget Vancouver's population. It's projected to keep growing, and that usually means more demand for housing.
Okay, so there's at least a glimmer of hope on the horizon. But even if prices do dip as predicted, Vancouver real estate is still notoriously expensive. Would this downturn actually make housing more accessible for the average person?
That's the million-dollar question, isn't it? And unfortunately, the report doesn't really have a clear answer. A 5 to 10% dip might sound like a lot, but when you're starting with prices over $1 million, it might not be enough to actually make a real difference for those who are already struggling with affordability.
So even with a dip, Vancouver might still be out of reach for many. That's a really important point to keep in mind. But let's flip this for a second. We've been talking a lot about the potential downsides. Are there any potential upsides to this situation? Are there any silver linings for certain types of buyers?
Oh, for sure. For instance, the Canadian dollar could weaken against the US dollar because of this tariff, and that might make Vancouver real estate more attractive to foreign investors who are looking for a deal.
Oh, that's an interesting point. So even with a trade war on the horizon, there could be some unexpected benefits for certain buyers. But wouldn't the trade war itself scare off some investors? I mean, it seems like kind of a risky time to be putting money into Canadian real estate.
Yeah, it's a bit of a balancing act. The report acknowledges that the uncertainty could definitely make some investors hesitant, while others might be drawn in by the potential for lower prices. It really just depends on their risk tolerance and their overall investment strategy.
So much to think about. It seems like this report raises more questions than it answers, especially when it comes to how the Canadian government might respond.
Yeah, you're right. The report's really focused on the economic impacts of the tariff, not so much the political side of things. So how might the government intervene? Will they try to cushion the blow on the real estate market? Will they introduce policies that could counter the tariff's effects? We just don't know yet.
That's a huge unknown, and it makes predicting the future of Vancouver real estate even trickier. So for our listener who's trying to make sense of all of this, what are the key takeaways? What should they really keep in mind?
I think the biggest takeaway is that while this report offers some really valuable insights, it's important to remember that nobody has a crystal ball. The future is always uncertain, especially when you're dealing with complex systems like the economy and the housing market.
So we should take these predictions with a grain of salt, not panic, but also not assume everything will play out exactly as the report suggests.
Exactly. This report is a helpful tool for understanding potential trends, but it's just one piece of the puzzle. We need to stay informed about all these other factors that could influence the market. Things like interest rates, government policies, what's happening in the global economy, even local factors, population growth, development plans, all of that matters.
It's like trying to predict the weather. You can look at all the data you want, but there's always a chance of an unexpected storm.
Yeah.
So what can our listeners do to stay ahead of the curve? What can they do to make informed decisions in such a constantly changing environment?
I'd say the key is to just be proactive and stay informed. Don't just passively read the headlines, dig a little deeper, try to understand the underlying trends, and most importantly, talk to people you trust, get advice from professionals.
That makes sense. Knowledge is power, especially in a market as complex as Vancouver's. But let's bring it back to the original question. Will Vancouver real estate ever truly become affordable? Is there any light at the end of the tunnel for folks who are currently priced out?
Ooh, that's the tough one. And this report, unfortunately, it doesn't offer any easy answers. While it does predict this potential dip in prices, it's not going as far as to say that Vancouver is suddenly going to become a buyer's paradise. The reality is that affordability is a really multifaceted issue. It's influenced by so many factors, not just what's happening in the market.
So it's not just about waiting for prices to drop. It's about a bigger shift in the economic landscape.
That's right. And that shift, well, it could involve all sorts of things. Rising incomes, changes in government policy, maybe even a change in how we think about homeownership as a society.
That's a fascinating point. It suggests that true affordability might require a much more holistic approach. We need to look beyond just housing prices and consider the bigger economic picture. But let's not get too philosophical. Let's bring it back to the here and now. What are some practical things our listeners can do today to navigate the Vancouver real estate market? Whether they're thinking about buying, selling, or just staying put for now, what advice would you give?
Well, if you're thinking about buying, don't let fear or uncertainty paralyze you. This report highlights some potential risks, but it also suggests some potential opportunities. So do your research, work with a realtor you trust, and be ready to act when the right opportunity comes along.
Okay, so we've talked about potential price dips and those bigger long-term things that could affect Vancouver real estate. But before we wrap up, let's go back to one thing. This report compares the current situation to the 2008 financial crisis. What are some of the similarities and differences, and how could those help us understand what might happen?
That's a really good point. Both situations involve a huge economic shock that could impact the housing market. In 2008, it was the subprime mortgage collapse, and now it's this potential trade war with the U.S. Both events create a sense of uncertainty that can make buyers and sellers hesitate, possibly leading to price drops.
So some clear similarities there. But are there any key differences between 2008 and now that might suggest a different outcome this time?
One big difference is the state of the market before the crisis. Back in 2008, the Vancouver market was already super inflated. Prices were way too high. But this time, the market has cooled down a bit. Prices are down 7% from their peak. This could mean the market's a bit tougher this time, with less chance of a huge crash.
Interesting. So maybe that dip we've already seen makes a big difference? Anything else that might set this situation apart from 2008?
Another difference is the role of government intervention. In 2008, governments all over the world stepped in with those big stimulus packages to try and stabilize things. We might see similar actions this time around, which could help lessen the impact on the housing market.
That's good to hear. It sounds like some things might point to a less severe downturn this time. But even if the market dips as predicted, there's still that question of affordability. Does the report give any indication of whether this potential correction might actually make Vancouver housing more accessible for regular people?
Honestly, the report doesn't really dive deep into affordability. It's more focused on those big macroeconomic factors. A price dip might create some opportunities for buyers who are already in the market, but it's unlikely to fix those deep-rooted affordability issues that many Vancouver residents face.
So this possible market shift might be more about creating buying opportunities for some, rather than really changing the affordability landscape for everyone.
Yeah, that seems to be what the report is saying. Of course, affordability is complicated. It's affected by lots of factors, not just housing prices. Income levels, interest rates, and government policies all play a part.
Right, it's not just about the price tag on a house, it's about the whole economic situation. So even if prices dip, it doesn't mean Vancouver is suddenly going to become affordable.
Exactly. This report highlights how the market could change, but it doesn't have a magic solution for the affordability problem.
That's a really important thing to remember. So, to wrap up this deep dive, what's the main takeaway, the final thought we want to leave our listener with?
The big message is this. The Vancouver real estate market is complex and always changing. This report gives us some helpful insights into potential trends, but no one can predict the future for sure. Stay informed, do your research, and don't hesitate to ask for expert advice.
Well said. Knowledge is power, especially in a market as dynamic as Vancouver's. And with that, we'll wrap up this deep dive. Thanks for joining us, and remember to keep thinking critically as you navigate Vancouver real estate.